Aberdeen Islamic Asset Management Sendirian Berhad continues to prefer the local equity market to the bond market as it deems the latter relatively expensive and unattractive. The fund manager prefers stocks in the banking, consumer and oil and gas sectors as they have relatively steady and reasonable valuations.
Its senior investment manager, Adrian Lim Ek Duen, said that reasonable valuation does not mean that a stock is cheap. Instead, the fund manager looks at the foundation of the stock and its valuations for the next 3 to 5 years. Lim added that in the global emerging market and the Asia ex-Japan index, Malaysia is in an overweight position. On a stock-by-stock basis, he still finds Malaysia attractive. Aberdeen's assistant investment manager, Edmund Goh Yi said that the local bond market is relatively expensive compared with other countries. Goh noted that 3-year Malaysian government bonds and 10-year bonds yields currently stood at 3.55% and 3.9%. He said the 3.9% yield for the 10-year government bond was unattractive and the yield should be 4.2%. On the 2015 market outlook, Goh expects economic growth next year may be weaker than the economist's consensus forecast of 5.2% due to a lack of short-term catalyst. On the 2015 market outlook, Goh expects economic growth next year may be weaker than the economist's consensus forecast of 5.2% due to a lack of short-term catalyst. He said unless the US economy's growth surprises on the upside, which could increase demand for electrical and electronic products, otherwise investment growth is likely to be relatively stable. He added that Bank Negara Malaysia will likely keep its overnight policy rate unchanged at 3.25% until the first half of next year.